Now, Forbes magazine just released their Billionaires list tonight. And topping it out are Mexican billionaire Carlos Slim Helú, Microsoft CEO Bill Gates, and investor in Berkshire Hathaway CEO Warren Buffett. But this year, we see the emergence of BRIC countries as key players, making up half of this list, while the U.S. begins to lose its grip. Now, while we all anxiously await the release of this list annually to get a look at the who's who and get excited, dreaming about what every one of us would do with that much money, you can't help but notice the disparities. This year's Forbes list broke some records. The total number of billionaires at 1,210, and the combined wealth of $4.5 trillion. All that while the wealth gap in the United States is at a historic level, and while the top 1% of the population in America own more wealth than the bottom 90% combined. Now, here to discuss it with me is Adam Hirsch.
All right. Who better to address all this than Republican Congressman Ron Paul of Texas? He's a member of the House Financial Services Committee. Congressman Paul, it's a pleasure. Welcome to the Glenn Beck program. So the Dow is down 228 points. The president just borrowed $223 billion in the month of February. Democrats in the Senate are abandoning the president and their own leadership. Who in the Congress takes seriously the abyss that we are facing, called bankruptcy, called $14 trillion in debt?
I think there's probably about 12 of us that really care about it and would cut the way we have to, and we don't have any clout, really. So I'm not very optimistic about what's going to happen on the short run. They can argue back and forth. I think they'll limp along and maybe have another CR and something like that, but it's just a situation that is overwhelming. The fact that the economy gets weaker, they pretend that there is not a weak economy and that we have employment improving and there's no inflation, but I don't think the people believe that anymore. But I don't see an answer on the horizon. We have to change our whole attitude. We have to change our attitude about policing the world and the welfare state and perpetual entitlements, and I just don't see it. Well, I think he's aware of it and he moves in that direction, but let's say we put more pressure on him. He can't even get $6 billion cuts, on some of these continuing resolutions. And then if you go up to 60, you're talking about a need to, the national debt's going up this year $2 trillion. So even with a little more pressure, it just doesn't happen. And you have to face the Senate and the conferences and the president. It is out of control. It's on autopilot. And we're going to march right off the cliff, and we're going to have a much worse financial crisis dealing with the dollar in the near future.
How bad will it be? What will happen if we march off the cliff? What will occur if we can't pay our debts? What will happen if 50% of tax revenue goes to debt service?
Well, I don't think it'll even get that far along. I think something will happen where the dollar will be rejected. Now, you mentioned the one company rejecting and selling all the treasury bills, Gross, I guess it was, that did that. But, interest rates didn't go up. Somebody else bought them. The Chinese bought them. So it's in their interest to try to protect the dollar well. So they keep limping along, but eventually that won't happen. Interest rates are going to skyrocket. Prices are going to go up. Prices are already going up. And standard of living is going to go down. We've lived way beyond our mean, and we're destined to live beneath our means as a nation.
Hello everyone, welcome to Global Government News. Today is Tuesday, March 15th, 2011, and I'm Darko. Welcome everyone to this news bulletin. It's good to get back to the regular news bulletins. I enjoy covering the Japanese earthquake tsunami, I guess you can say disaster, and I'll continue to do it and include information into my news bulletins, but I'm just going to stick with the news bulletins right now because I've had news just stacking up, and so let's get to it. I just need to plug my website here. It's Global Government News, and it's www.ggnonline.com. That's ggnonline.com. You can go in there. There's a poll that will be posted for 6 more days. How much danger does Japan's nuclear radiation epidemic, of course in Japan, I didn't mean to put that, it's kind of redundant, but either way, is how much danger does Japan's nuclear radiation epidemic in Japan affect the rest of the world? And right now, the majority of the people have voted very much or somewhat or not sure yet. They're just kind of waiting to see what happens. You should or you could subscribe via email and FeedBurner by entering your email address. You can follow me on eBlogger right here, or if you go down to the bottom of my website, you'll see a little a little spot here where you can go to Facebook and you can follow me on Network Blogs for Facebook. So let's move on here. We're going to start off with stocks, and we have U.S. stocks pair drop after Tokyo plunge. Oil falls, bonds gain. U.S. stocks escaped the brunt of a global sell-off that sent Tokyo shares to the worst two-day drop since 1987, pairing losses as Japanese officials made progress stabilizing damaged nuclear reactors, and the Federal Reserve said the economy is improving. I mean, God, I just have to laugh at that, you know? Commodities slid and bonds rose. And it says here, global stock volatility surges as traders seek hedges on Japan, option prices, and bets on higher equity. Volatility jumped from Tokyo to Frankfurt and Chicago as investors sought protection against stock market losses amid concern that the risk from radiation leakage at a power plant in Japan is increasing. And it says here, stocks nosedive on panic selling over new crisis. Tokyo stocks tumbled further Tuesday with a Nikkei index shedding more than 14% at one point on panic selling trigger deepening troubles at a Quake hit nuclear power plant, said the 225 issue Nikkei stock exchange or stock average fell 1,015.34 points or 10.55% to close at 8,605. And we're going to move on here. Buyers creep in amid broad market tumult, and it says here, fears of a Japanese nuclear disaster drove stocks and commodities down around the world on Tuesday, but late in the day, there were signs that investors were beginning to buy again. Tokyo shares and day down on 11%. Quake sell-off wipes $287 billion off Tokyo's stock market. Then we have Tokyo Exchange denying rumors, says it won't close. And it says here, Japan feeds more money to banks as stocks slump. And I read this last night, and it just kind of made me feel kind of sad. I don't know why. It just, here in the U.S., we're just used to this corporatist system where, millions and billions of dollars are pumped into, like I said, a black hole, right? Siphoning off of wealth, transferring all of the risk, all of the losses, get transferred on to taxpayers. And of course, it's socialized, right? Socialize the losses, privatize the profits, and that's what we live in. And I was just remember reading about Japan basically issuing some sort of a stimulus recently, and of course, they don't have the money just like us. And then here comes the quake. And then now they're going to feed more money into the banks as stocks slump. So Japan's central bank pumped billions more into the financial system Tuesday to quell fears that the country's banks could be overwhelmed by the impact of a massive earthquake and the tsunami. Stock slump for a second day as a nuclear crisis escalated. And of course, that never really is a solution, right? A long-term solution. It's just a Band-Aid, and all it does is decrease your standard of living as just an average person. But what is this going to do? Well, this is going to help all those that are on Wall Street and the different stock exchanges around the world, the big-time investors, the millionaires, the billionaires, the trillionaires. This is for them, so they can keep their assets afloat. It says here, crude ends down almost 4% on Japan crisis. Japan nuclear crisis worsens, radiation released. Pro-Gaddafi forces retake oil towns marching east. Bahrain declares martial law to quell uprising. IEA trims demand forecast, warns of high price impact. From Reuters, U.S. crude oil futures fell nearly 4% on Tuesday, their biggest one-day percentage loss in nearly 5 months, as the worsening nuclear crisis in Japan chased investors from riskier assets. Then oil futures plunge on worsening Japan fears. Oil drops 4.5% on Japan. Mideast clashes eyed. IEA warns of oil price shock on global economy. Sustained high oil prices will damage world economic recovery. The International Energy Agency said on Tuesday as it warned that OPEC's cushion of spare oil output to calm the market was at its lowest for 4 years. Then high oil gas prices destroy 600,000 jobs. All the links, or at least most of these links, should be posted in these videos. The one from last night wasn't posted for some reason. I could have sworn I put it in there and saved it, but when I went down there later, the links weren't in there. So that's the first time that's ever happened. But if most links should be in there, if they're not, it's just because sometimes I cover 60 articles to a video, and it's just way too much. So I try to do a little triage where I take the most important articles, or the articles I feel are most pertinent to the viewers, and then I'll include those links. So most links should be posted. Commodity futures, you can see here, just as it was reported, commodities have dropped, about 10% almost, and it says here that heating oil futures were down almost 30 cents. Natural gas was up almost 5 cents. And then Brent crude was down $5 a barrel. It says here $108 a barrel still. That's high. And then we move down to cocoa and coffee. Cocoa futures were down $134 or $63, and then coffee down $10, corn down $30, cotton down $7, wheat down $48 and $53, soy's down what is this? $14. Sorry, I was looking at the oats. And then we have copper futures. Copper still up at a record high, $3.70. It was up, and it's up trading at $417. Gold is at $1,394 an ounce, up $1.60, and silver was up. It looks almost like 9 cents, and it's trading at $34 per ounce. So. Moving on here, slower growth signaled by Wal-Mart shares as commodities depress consumers. Economists ignore volatile commodity prices when calculating inflation. It's like, why? I don't know. It says the poorest families who spend as much as 25% of their after-tax income on food, fuel, don't have that luxury. So, and we move on here. U.S. retail sales jumped by 1% in February. U.S. Retail sales are growing strongly according to official data. Gas, coal exports, do I agree with that? It may, but do I think it's going to be sustainable? No. It says here gas, coal exports tipped to rise after Japanese disaster. Demand for Australia's key exports to Japan, coal, iron ore, and liquefied natural gas is set to rise in the wake of the massive earthquake destruction, with prices to benefit from supply tightness. Then we have import prices rise in February. The price of goods imported to the U.S. climbed 1.4% in February from a month earlier as costs increased for energy, industrial supplies, and food. Then hedge funds had bets against Japan. Even before the disaster, big investors were wagering on economic problems. So what were they doing? Well, it's like I said with Goldman Sachs and that they bet on losses. They bet on bad things to happen. I'm not saying it's evil. I'm just saying that when you have companies like the Goldman Sachs, who happen, I would go on a limb here and say that these guys, talking about insider trading or information, right? Because it's all about information and when the markets are going to go bust or some kind of quote crisis is going to happen, right? Like a false flag, like a BP type thing, where they just happen to be investing in certain companies that are going to take losses, and they bet on that. They bet on the losses, and they make a lot of money off of it. So if you know when things are going to go to crap, right, or hell in a handbasket, and you bet on that, you're going to make a lot of money because most people bet on stocks that are going to go up. So high yield bond issues, loan repricing pulled, treasuries rise. And then we have here, China should steer clear of U.S. debt, experts warn. Then China sold treasuries for a third month. Japan bought. China appeared to be the net seller of U.S. treasuries for the third month in a row during January, but remained the largest foreign holder, the Treasury Department said. Meanwhile, Japan continued its net buying of treasuries, hitting another record. Then chip prices. Chip prices jump as Japan Quake threatens the supply of computer chips. Dollar depressed by OPEC slashing treasury holdings by 9%. This is from Bloomberg. Oil exporting countries are cutting holdings of U.S. government debt as energy prices rise, helping depress the dollar, the worst performing major currency of the past 6 months. And, it's my personal belief or opinion, but it really does seem as though, or appears as though, the dollar is coming to its end, to its demise. In other words, it was going to happen eventually. It was just a matter of when the elites wanted to dump it as a reserve currency, and all they have to do is create a certain crisis, and boom, it happens. They get what they want. Why? Like I said, because most of the time they get what they want. So it says here, U.S. backing for world currency stuns markets. So see, this is what I'm talking about. Perfect example. Do the American people want this? No. So it says U.S. Treasury Secretary Tim Geithner, a sellout to the American people, shocked global markets by revealing that Washington is, quote, quite open to Chinese proposals for the gradual development of a global reserve currency run by the IMF. So as you see, they're sellouts, selling Americans down the river, their sovereignty. Please join me in part 2. This is GGN, and I'm Darko. Thank you.